Hello, everyone. Stocks had a pretty good session on Friday. It was actually an excellent session overall if you just ignore volume and ignore what's happened in the past week. But the market for the NASDAQ was up 1.53% on Friday. Volume, unfortunately, was well below average. But I tell you what, considering the amount of selling that we saw earlier in the week, this was a great way to end the week for the market. The S&P 500 managed a 1.23% bounce, and the Russell 2000, more importantly, was up 1.45%. Very good. And then, even more importantly for me, the weakest index, the Dow Jones Transportation Average, was up the most today, 1.85%. Big reversal off the lows there, as you can see, breaking out above short-term highs. So it's a good sign. And another good sign is if you look at the oscillators, you can see the Dow Jones Transportation Average has turned up slightly off its low stochastics. This is my favorite one to use. The other oscillators are in oversold conditions, and actually, if you look at the TSV, it's even moved up on the Dow Jones Transportation Average. But if you look at the Russell 2000, you can see stochastics are still screaming lower. Everything's oversold. TSV is starting to look positive, so that might be a leading oscillator that's turning higher. But the same thing as you have with the NASDAQ. RSI and stochastics racing to lows, so is MACD. TSV starting to turn higher, but the bottom line is we are now oversold on these indexes, so we have a higher chance of rallying back to the old highs than we do right now of actually breaking down to new lows. If the market's really weak, we will break down to new lows, and oversold will beget more oversold readings, and we can stay oversold longer than longs can stay solvent if we're in an ugly market. But for now, it looks pretty good for the bounce. I don't have, I mean, there are obviously things to complain about. None of the indexes are back above the 50-day moving average. While fear is pretty high, the fear and greed index, I guess CNN is at 18. The lowest it got was 2. I've seen it before at 0. VIX did hit 20, but in my lifetime, just in 2008, I think I saw it hit 80. The put call ratio 13-day moving average has been like 1.13 for the CBOE, so that's pretty bad, but I've seen it average over 1.25 for longer periods of time. And then also Investors Intelligence sentiment is, I think, at 44% bulls right now, which while that's come down a lot in the past week, bears are still at 15%, so we haven't seen the bears bulls cross, so there's no way to say that, oh my God, the selling was so terrible that everybody's capitulated. And then AAII, while there's like 24% bulls, I think 27% bears, there's over 40% that are in the neutral camp. So it isn't really an extreme fearful tape overall, but it's a good start. Could be for a healthy bounce. More importantly, the positions that we hold long, which I actually am holding more long positions than I ever have. Not ever. I think in 2007 I held more long positions. So this is the second most long positions I've ever held. On Friday, everything was up. Like 95% of everything was up, and 100% of everything that I'm long now, following my only full sell today, looks great. Looks good. Looks solid. These technical patterns that I have, like for instance, like RCPT, looks like that's a bull market chart to me. HCKT looks pretty bull market. ATSG, pretty good. So, and look at CBPO reverse off its recent lows, off that scary sell-off. It's pretty strong looking tape overall. The only bad stock I had today, HELE. Earnings were released, I believe, last evening, and a bad open, but thanks to stops. One of my stops was at like 92.50. Nope, that's not even right. So my first stop was at 93.37. However, I think I got a pretty bad fill on that one because I do believe I was like filled like at 92.80 something. But that's where the first sell stop was, and the second sell stop was right below here at 89.15. It got me out like at 88.90, but you can see the stock closed at 86.71. So the good news is that on the first position, took pretty decent gains overall on that half of the position. And then the final half of the position, I basically left break even. So even on a terrible sell-off in this stock today, the worst that I got hit was break even on my final sell stop. So besides that one position, everything looks good. Obviously, following Friday, you want to look at your sell stops on the inverse ETFs that we have. BIS, the first level of support is 27.64. The next level is 26.53. BIS still looks good. TECS, after the big 2 up days following the long signal here, the good fill and the good overall session, pulled back a little bit today, but overall it still looks pretty solid. Just goes to show that the market is pretty neutral right here, leaning bearish. Our individual longs look good, but they might be the only stocks out there bucking the trend because my scans don't look that healthy. But 39.07 is the final line in the sand, so we don't risk much once again if the market does run on this inverse ETF. And then the last one I still have is DRV. Following this session right here, I put 50% of my sell stops below 25.13. Intraday today, it was hit. The final sell stop is right here at 24.40. Obviously, that one rings true, but overall, the pattern doesn't look good. But if it does reverse higher, no big deal. I still have a tiny position. I think it's like 40 shares, so it's pretty insignificant. But like I said, overall, everything outside of HELE looked great today that we have long. Now, unfortunately, there wasn't a whole lot of hot stocks. I did flag like AGN. That's a nice breakout. No volume. ALK up a bit much in one day. Royal Caribbean Cruises. I hate cruise ships so much that I'm biased against these stocks, which is probably going to cost me. But RCL is breaking out the pocket pivot point signal. Not enough volume for me. And the hardest one to pass on tonight was NCLH. It's a pre-perfect speculator scan quality stock and a CanSlim quality stock, so I kind of wanted to buy it. There's really no volume surge. There's no pocket pivot point signal. And like I said, I hate cruise ships because I live in Lahaina. It's kind of hard not to. So I'm kind of biased against it, so I'm not going long, but it's probably the best one out there that I'm not taking. Well, we are going long this weekend, ABMD. None of these are perfect, so it's not like, oh yeah, we're definitely bottomed here, and that's another indication that we probably haven't. Like I said, if we were really going to turn around here, not only would my personal holdings look great, but our scans, our long scans, would have some beautiful stocks that have already started to show some strong relative strength. We don't have that out there. ABMD produced a pocket pivot point signal yesterday, but refused to close at the high of the day. That means I can't take it as a new long position, especially in this tape. However, today it successfully had a very bullish session, closing pretty near the high of the day. Excellent follow-through, absolutely excellent, breaking out above the recent June resistance levels, late June resistance levels. So it's a breakout over short-term resistance. It's a follow-through the pocket pivot point signal. BOP increased slightly. This is a perfect speculator scan quality stock and a CanSlim quality stock. It's not just a CanSlim quality stock. It has a 99 earnings per share rating, which means it's in the top 1% of all publicly traded companies. This is a medical appliance and equipment stock, so obviously it's in the right sector. Also, I got an ad signal. Oh, first off, ABMD, I'm going to go ahead and do it. I'm going to increase the size back from 2 to 2.5%. Just because our personal holdings look good and the medical stocks look good, so this is a 2.5%er. Also got an ad signal on Regeneron Pharmaceutical. This is a biotechnology stock. This is a CanSlim quality stock and a pre-perfect speculator scan quality stock. Pocket pivot point signal today bounced off the 50-day moving average. We do not risk much at all if we're wrong for a huge potential reward. I mean, you can just see since 2011 to now, the stock has moved from $40 a share to $526 a share. And that amount of time, that's a 1,429% gain in 4.5 years. So the stock still looks good for even more gains. Doubt we'll get a measured move, but hey, why not at least try to triple or quadruple the risk? So I'm at least looking for a 12% gain compared to the 3% loss if we're wrong. 4% loss, so you can look at a 16% gain. And then the new long position, the most trickiest one of the evening, PGTI. Why is it tricky? Because on Wednesday, when the market was down almost 2%, this stock stood out because it's had max green BOP for a very long time. It's had green BOP for over 20 days, so it's in 2 BOP scans. Had a volume surge after the light volume pullback. Volume was good, but since it didn't close over the 10-day moving average and the market was ugly, I didn't take the long. The very next day on Thursday, there's the pocket pivot point signal. Now I'm regretting not going long. However, it closed so far off the high of the day, I'm starting to think that, okay, it's going to spend more time consolidating. Well, on Friday, clearly, that's incorrect. Follow through pocket pivot point signal on even heavier volume. It still has max green BOP, so it was in the max green BOP for 5-day scan and the BOP green for 20-day scan. It's also CanSlim quality, but it's a sub 20 stock, so it's not that great. Since it's a little extended and I'm basically maxed out again in my cash account, this is only going to be a 1.5% long position in my cash account and 2% long position in my margin account because I'm going to give it all the way to the low of the support low at 13.79 before I decide to exit. But this is a very nice looking stock considering that the market that we've just had, the sell-off. So we'll see if it follows through, but my holdings looking good. My long scans not looking that great. Short scans, though, they're not producing anything. Market is very neutral. Keep an open mind and stay neutral.